Okay, the biggest news that has happened today or over the weekend is, if you haven't heard already, in China, the Triple R has cut by 100 basis points. Now, what that basically means is that there is a stimulus in China of approximately around about $200 billion, which is encouraging banks to lend more money. So they've created more liquidity for banks to lend out more money to help spur on their economy and recover from what is getting into a bit of a dull moment. Now, what does that mean for us? Well, in Australia, if China is doing well, generally it means that our Aussie dollar benefits from China money, as they are large purchasers of our iron and copper and those types of commodities, as well as a lot of that money coming into the country in form of real estate as well. So you would have seen this morning the Aussie dollar gapped over the weekend news. On the Aussie dollar, it gapped approximately around about 40 odd pips. The bigger movements were on the Euro Aussie and also on the Aussie Yen, which is around about 65 and 50 points respectively. Now, the market did try and close that gap. We'll have a look at that in a moment. But that was basically the biggest news that came out over the weekend, and that's what caused that gap. In terms of what we have this week coming forward, we do have the RBA monetary meetings, which will happen tomorrow. And essentially this is a big one because, look, if it was up to the RBA, interest rates would have been cut already. Now, in theory, they're not supposed to be influenced by other factors. The other major factor which is affecting that decision is basically property growth in Australia at the moment. If should they cut rates, well, basically what that would mean is it would mean banks will follow and cut to some extent as well, which would basically increase lending. Increased lending increases a further fuel into the housing market and pushes house prices forward. Now, in theory, the RBA is not supposed to get involved with those things, and they should just make a decision based on the country's economy as a whole. That is part of the economy. And look, the reality is that they want a weaker dollar. A rate movement downwards is pretty much on the cards. Everybody can see it coming. Whether it happens next month or the one after, I don't know. And that's where you need to position yourself should such a move happen. Now, the dollar has recovered somewhat to the 78 level. That's predominantly on the back of weak data from the US all of last week. All right, so tomorrow this will be interesting to see if any of the wording in those minutes indicates a possible cut in next month's, which is in 2 weeks' time, RBA announcement. Other than that, we do also have Aussie data on the Wednesday. This week is more about the euro. We got French and German PMI numbers, German here as well. But the biggest one, I guess, in terms of what for the week is probably going to be this one, the Euro group meetings, which does include Greece's situation, which they have to front up to their creditors, and they're trying to see if they can resolve or come up with some kind of a game plan on how they are going to pay back some of that debt and that program that they've entered into. That is on the 24th of April. Already now the market is starting to react. The euro has been ranging in a quite large range, but should the Greece situation not end nicely, it could mean Greece being kicked out of the euro, which would basically put the whole euro currency under threat, and definitely parity against the US dollar would come into play significantly. This particular week is very light on US data. The US dollar last week pretty much lost ground against all major currencies. This week, because of the lack of US data, we could see the US currency make somewhat of a comeback, only purely because it's not so much dependent on its own data and still very much strong on the front, I guess on the front foot, is that they still do want to increase rates, although the more it lingers, the longer it feels they will come to that decision. I was hearing this morning from specialists and analysts on CNN, they're talking even that it may not even happen in 2015. Now that's only one or two analysts' opinion. September looks likely, and that's where most people feel it's situated. So a lot of US currency traders and people who are positioning themselves for such are now thinking there's some good bargains on the table. Okay, so this week I guess probably the currency that's going to be under the spotlight the most is going to be euro related currency. So probably the euro USD is the one that I see as the one that's going to be most heavily dependent on data, not because of the US side but mainly because of the euro side on the meetings, and that's pretty much going to happen. Well, we got the German and French PMI which heavily affect the euro, and then the meetings on Friday which includes Greece fronting up to their creditors and seeing what kind of a situation can be resolved. Alright, so that's the fundamentals for this week. Let's bring out our charts, let's see what we got, and let's get through them right now. Alright, Aussie dollar. Last week I drew in the pre-recorded class, I drew a couple of lines where I felt the dollar may start to converge, and the reasons for that was very simple, because we had increased our trading range, and when that happens I normally look for a narrowing of the trading range. There was one trade opportunity for any astute person out there. You may have seen it, this one here. Okay, if you didn't trade it, that's okay. I understand it's a little bit tricky, but basically we've got a fractal down here, which means I can now remove this line and I can lock this one in, okay, as such. Now what I'm looking for, if anybody traded this one, can I just get a show of hands? Did anybody go long Aussie dollar of this inside candle here in that direction? Anybody? Bijan did. Well done. Anybody else? Okay. If you didn't take this one, I understand it was a little bit trickier because you had it kind of looking like a double bottom, but that one was on. We did talk about it. What I'm looking at right now is I'm getting the feeling that I may be able to lock in this line right over here. Now what I like about this particular point here is that it coincides with a fib level. Okay, see that? What I've done is I've drawn a line from up there to the bottom and then come up here, and it's on my 78.6 Fibonacci retracement. So what I'm actually looking for, I don't want to trade it right now, but what I'm looking for is, let me get rid of these Fibonacci lines so my chart's a bit cleaner. What I'm looking for is for this candle, this is today's candle, to finish somewhere inside of these parameters. I don't care what it looks like. As long as it doesn't break that high, what will happen tomorrow is I will get a fractal up there, and if it doesn't break the low, I will get an inside candle which will basically set up a trade to short down, and it will lock in this top line, and it will put out the actual the prediction of a converging trading area for us. Okay, so what you need to do tomorrow morning, now is everybody aware there was a daylight savings adjustment while I was away, so everybody knows that right now the first candle starts at, I think it's 8 a.m. or 7 a.m. I didn't even check this morning. Can someone just confirm for me? Is it 7 a.m. or 8 a.m.? Anyone? Guys, you've responded with a yes. Which one was it, the 7 or the 8? 7 a.m. Okay, thanks. Sorry, I've just crossed over like about 4 different time zones, so I am all over the place. I've been trading London Open at 3 a.m. in the morning from where I was, so I only arrived last night. The market's just opened this morning and I only woke up about 2 hours ago, so apologies. Alright, so 7 a.m. So 7 a.m. tomorrow, you look at this chart. if this current candle has stayed within these boundaries, pretty much you can set up your break-in trade to come back down into the channel. Alright, so tomorrow morning, check on that one. That's the first trade of the day, Aussie US dollar. That's all I got for you on that one, and I actually like that trade. It coincides with data. What's the data tomorrow? 2:30 with the minutes and so forth. So let's look out for that one. Okay, let's move on. Euro USD. Okay, Euro USD. Last week I drew out, well actually over the last 2 weeks I drew out this trading range. The week before we had an opportunity to trade that one down, and then this week we didn't get an opportunity there. Unfortunately, with this we didn't get an inside candle. That's unlucky, but we're still inside that range. This particular one this week is going to be interesting. It's been trading inside this range, and depending if there's some kind of an outcome with the Greece situation, we may be able to pick up a trade out of it. Right now, as you can see, we're right in the middle of it. I don't actually want to touch this one because there's really nothing for me at this particular point. What I'll be looking for is as follows. Now, we've had 3 touches at the top. If we go back up again, I do not think we're going to get a 4th touch. I think if we go back up again, we will break it, and then that could be the signal of a recovery in the euro. Okay, that's one option. The other option is that it comes back down, alright, and if we break it down, this could be the collapse of the euro. Alright, and then I'd be looking to trade for that. Now remember, these classes are not about me predicting which way it's going to go. It's about trying to identify the trade with the best probability. Alright, now off the bottom, we could get a bounce. Off the top, technically you could. I just don't think that we will. It's already been there 3 times. 4 times is not that likely. So my gut reaction is this one here, that we're going to move towards the top, break it, and then start to move away gently. It's not going to be a rapid move. Okay, so the euro right now, Euro USD, even though it's the one that's on the spotlight for the week, it's right in the middle of this trading range, so we don't want to really do anything right now. What we're interested in is waiting to see the perimeters. What happens at the perimeters? I get the feeling that if it goes to the top side, it will break it, and then you may have an opportunity to trade upwards. If it gets to the bottom, you could get a bounce off it or the break. So look out for those. I'm back home now, so I should be able to spot it. When I do, I'll push it out if I feel it's a really nice setup. Alright, any questions on the euro? Let me have a quick look on a 4-hour chart to see if I've got anything for you. That may look like an ABCD. Give me 1 second. Close-ish. There's an ABCD there, but we've just missed it. Can everybody see it? A, B, C, and this is at the 1618 level, and D is at the 618 level. Did everybody see how I worked that out? Does anybody want me to show it again? So basically what I've done is I've drawn a Fibonacci level from there, from A to B, and you can see the C level is at the 161 right there. Okay, it's not exactly on, but it's pretty close. Alright, and then what I've done is I've drawn a fib lines from the B to C, and you can see clearly here that top level there is on the 61.8. So then naturally what should happen is this. Alright, so, but we're a little bit late on it. The trade was up there, so it would have been on Friday night. It's good practice, good practice. You can see when your eye can almost spot them. Like when I see that, it looks to me like it's got, your eye just gets used to the levels. Alright, but that's over. So if anybody wants to, it's a bit aggressive right now, but if you want to, okay, there's a little trade right there to short Euro USD. I'm not going to take it, but if anybody does, it's there. Alright, there was no questions on the Euro USD, so just remember, let's keep an eye on that top perimeter and the top boundary, and the bottom one as well. Let's move on. Let's have a look at the GBP USD. Okay, I started drawing a set of parallel lines. We went down to the bottom, but unfortunately we didn't get a clean setup here, so we couldn't get a trade out of it. If we're trading strictly engulfing and inside candles, that's unlucky. Now what I've noticed is that the 150 level, this candle right there, this one here, which was Friday's candle, it went through 150 and shot back down straight away. So this 150 level is holding, it's quite strong. And it makes good sense because if you have a look at that, it's that first the 150 level acted as support. Now it's come back and it's resisted like about 5 times now. So we've got 1, 2, 3, 4, again 6 times that it's come back and it's fighting. Now I actually like this channel that I've drawn on the chart, so I'm going to try. What I'm hoping happens is this to break through the 150 and then maybe try and take a trade back down off that parallel line. Alright, that's the trade that seems to me most likely that could occur within the space of this week. Alright, let me have a quick look on a 4-hour chart and let's see what we've got. My 4-hour chart doesn't really show me anything, so I'll stick with what I've just said. On the daily chart, the trade that I really want is I want it to go to the top of that boundary, and then I'm going to be looking for a fractal setup, either an engulfing or an inside candle, and then try and shoot back down off that level. Okay. One thing that I wanted to talk about, just notice this. When we went down to the channel in this area, we didn't get an inside candle trading opportunity. Okay, I understand that. However, once you get more confident, I'm trying to basically help you trade the inside candles and the engulfing candles because they have a much higher probability and they're much clearer and easy to spot the trade. That's the reason that I'm pushing that particular type of trade. However, on this occasion, you would have noticed that you're on the bottom of a channel. We touched it, but also we had divergence occurring. Okay, we had our price going down and my indicator going in an upward direction. Okay, so we had divergence. So you could have been excused for taking a trade at the start of that candle in the upward direction. Okay, so you would have had 2 reasons to take that trade. You would have had the channel and divergence. All right, divergence on its own is not good enough. The probability is probably 50%, so don't just trade divergence because there's divergence. But when it's coupled up with something else, it increases your chances significantly. All right, so that's that one there for you. All right, so this week with the GBP USD, we're waiting, and let's hope that we can get up towards this top line and get a trade out of it. Okay, let's move on to the next one. Let's have a look at gold. Okay, this is an interesting one. For those of you who saw the pre-recorded class last week, you would have noticed that I had this line drawn something like this. Okay, and if I go back, it's 1, 2, 3, 4, 5. Alright, so I had it drawn, or maybe I had it drawn, give me 1 second, like that. Somewhere there. And then we had, what I was thinking was going to happen is this down to this level there. Now we did get a break here, but it shot straight back up and it left a little tail. Now, by the way, I'm on a daily chart, okay? So if you're trading price action is only traded when the candle completes, okay? So you've got to wait for the candle to complete. Otherwise, you're not really trading price action. You're trading something different like a break or something of that nature. So when this candle, the one that I've half circled there, for you to trade it downwards, what should have happened, it should have closed down there. It looks something like this, like a big red candle. I'll color it in a little bit, and then at the start of the next candle you hit the trade down. When you saw that the candle went right back up and left this tail, you're in a bit of a doubt situation. Some of you may have taken the trade, some of you may have not have taken the trade. Okay, the reality is, if you were just trading the straight break, you would have entered up there and you would have been positive for a little while and then back to break even. Alright, so I never enter a trade when the candle just, if I'm trading price action and it's left with a tail, I never talk about entering a trade like that. I would have if I was trading the break, but not if I was trading the price action. So in theory, you shouldn't have taken this trade. Okay, did anybody take this trade short? I just put it out there. Because I know a few of you do look at gold. So this one, and if you did trade it short, in any case, you would still be in this trade. Alright, because it hasn't gone backwards or forwards. Okay, so a few of you are saying no. Alright, so I just wanted to explain that. Now, what I want to do now is, because this candle has been left with a fractal, and that fractal is higher than this one, what I now want to do is I can now change this line and use this triangle. If this fractal was lower, if this one was lower than that one, that's it, the pattern is over. Okay? But because it's higher, the market is still going higher and doing this, and I'm still going to look for this trade again. Does that make sense for everybody? Alright, so luckily nobody took that trade and it would have been incorrect. So let's apply the same rules again and let's see what happens. So the pattern is still valid. We just had to adjust the line, and this is a good example of how we adjust our line. And so what I'm looking for again is I'm looking for a clean candle to break it down, and then I will take the trade as such. Okay. Alternatively, we can get the break upwards and go in that direction. But this particular pattern, it's more typical that it breaks down. Alright, so it's one of those ones that does this starts to get narrow and then just shoots back down to a level which is close to that bottom. So that's what we're looking for. Alright, so hopefully I've explained that well so that you can understand it. Go back and listen to it again if you need to. But that's what I've got for gold this week. That pattern looks really, really good. Alright, so we'll stand our ground and let's see what happens with that one. Bijan is saying we're in a downtrend as well. Yes, I guess. Let me zoom out a bit longer. Well, okay, I wouldn't really call it a downtrend when I look at my chart this way, Bijan. It's come from that big long downtrend, and now the market is fighting to go back up, and it keeps hitting that roof, which is creating that perfect pattern that we're looking for, and then till eventually it falls and breaks in that direction. So that's what we're looking for. Alright, so once we break this level and go through there, then we can say yes, we're in a downtrend again. Okay? Alright, let's move on to the next one, US yen. Okay, the US yen. In the last couple of weeks, I identified a narrower range within a range, and it's that box there, and we've been staying inside it. Let me zoom in. There's a couple of things I want to show you with this one, so let me stretch it out a bit longer. First of all, the last couple of times that we spoke, we were here and here, right in the middle, so we've done nothing. We are now approaching a critical level, so we're probably going to get a trade opportunity here very soon. Does anybody look? My preference is I want to go that way. I don't really want to go this way, but if something shows itself, either I'll do nothing because I don't want to short the US yen, or I'll take the trade. But the one that I really want, what I would really like to happen is this. I would like this current candle to go lower, maybe even to about there, but then close above this level. So let me try and draw it in the right colors, and I'll show you what I would like to happen. I would like this candle to maybe close there somewhere, and in an ideal world to leave me a little wick, and I don't mind if that wick goes below. I actually prefer if it goes a little bit below, and if it does, it may go even a little bit lower, because what it may do is take out all the stops, okay, which is good. I want that to happen. And then the next day I would like some kind of a candle in here like this, and then the next day, which is Wednesday, I want to go long in that direction. Okay, that's what I want to happen. That's what I think may happen. Now, if this happens, there's an extra good reason to take this trade, and that is we would have had 1, 2, 3, 4, 5, 6, 7 consecutive down days in a row. Statistically speaking, this doesn't happen very, very often on the US yen. You can scroll through years worth of data, and this occurs very, very rare. Okay, usually you will have, even if it's a little blue candle like that one that I've just circled, you will get something. So if I get 7 down days in a row, then, well, typically you should trade that day there. We're not going to do that, but it's still a good reason for me to take the trade. Okay, so what I'm looking for is, I'm looking for this candle to leave me with a fractal there, inside candle, and then take the trade on Wednesday. Does everybody understand specifically what we are chasing on this particular trade? Let me get rid of my drawings. That's where we are right now. Okay, fantastic. So it's unanimous. Alternatively, this current candle could continue and close down there, and then basically it's ready to go short. Okay, I don't like that trade, but that's what it would say technically, from a technical point of view. Alright, so if that happens, well then basically if you feel comfortable, just short it. Alright, let me have a quick look on a 4-hour chart, see if I can see anything different. No, nothing there at all. Alright, we'll leave it as it is, and on a daily chart we are preparing. This one should be ready maybe tomorrow, Wednesday, so make sure you keep an eye on it. Alright, let's move on to the Euro Yen. Euro Yen. Okay, we drew out this congested region last week and we've broken it, but we've pulled back in. Okay, so what I can see is a couple of things. First of all, I think there's an ABCD pattern there. Let me have a quick look. No, not quite, just a bit too long. Okay, let me go back to my daily chart. What I'm looking for is, I've drawn in this top line, okay, it's been respected quite well on the top side and this level here, so I think this line is good. So what I'm looking at, I'll zoom in so everybody can see it a bit better. What I've also, if I draw a Fibonacci extension from this point to down here, so basically from there down to here, and I pull back, what I'm going to be interested in is as follows. I'm going to be watching the 61 level, particularly close, and the 78 level pretty close. Now, if it match, well actually not the 78, because we can't get to the 78 without respecting this line. So if this gets up to here, into this area there, where we are at the 61.8 level and we are on that white line, what I'm particularly interested in is, let me get rid of the Fibonacci line, so now I've explained why I'm choosing that level. What I'm particularly interested in occurring is to get some kind of a candle formation in there that leaves me with the fractals so I can short again. Okay, and that would be where we are at the 61.8 level of this movement. Alright, so let me just, I'll call out the number so that we can all see it. That 61.8 level occurs at around about 129.30ish. Okay, at the moment we're about 130 pips below that, so look out for that one. We should get a nice little trade set up should we pick that one up. Okay, is that clear for everybody? Do we understand what we're doing? Let's see if it's on a 4 hour, it's a bit clearer. There's that line that we're talking about. My 61.8 level occurs here. Let me put a little mark on my chart right there, and it's at 129.30 something. Okay, so if you want to, you could even trade it off a 4 hour chart if you wanted to. If you'll probably get tighter entries. The line is still respected over a 4 hour chart, you can see. Okay, so let me zoom in. So if you want to do it off a 4 hour chart, you're looking for a candle formation around about there somewhere that allows you to go short. That would be a lot stronger than if it happened up there. Even if it happened up there, I still like this top line. I would still trade it off that. I would just prefer it if it happened on the 61.8 combination. Okay, Paul, I'm not understanding your question. Bearish engulfing on the 50%. Oh, okay, hang on a minute. I understand your question right now. Give me 1 second. Let me just look. Well, the 50 is right here. Were you talking on a daily chart? Let me see. I think you are talking on a daily chart. Let me zoom in even bigger. Okay, what Paul is saying is this, we are on the 50% level right now, and this candle engulfing that candle there. Now, this candle has not finished yet. It would have to go below this level here for it to be an engulfing candle for starters. So it has to go a bit lower. If it finishes like that, then tomorrow morning at 7 a.m. you're ready to short it. Is that what you're saying, Paul? Can you just please confirm for me? That's what you're looking at? So we need to wait to, yes, that's right. Okay, so yes, that's a valid point as well. So if anybody likes that, it's good. I don't like that as much as I like this one, because this one I've got two reasons to take this trade. One, this top line is very strong. Okay, taking this combination, all I'm doing is purely trading a Fibonacci retracement on its own. Alright, now given that I'm in a breakout zone and it's pulled down, I would bet that over here we're very close to my 13 EMA. Let me just double check. Okay, see, there you go. Look at that. We are on. Remember when we trade breakouts? We've broken out. Wait for the pullback into the 13 EMA. There you are. So if I was trading it in that way, I would have already been in this trade. Okay. So I'll say this. For those of you who are aggressive, you can take this trade if it sets up by tomorrow 7 a.m. However, I prefer this one over here. Okay, thanks for pointing that one out, Paul. All right, let's move on. I'll leave these marks on my chart so I understand when I look next week. Let's have a look at the Kiwi Dollar. Okay, Kiwi Dollar. As you can see on a daily chart, it's been pushing forward and forward and forward, and we're getting a very, very nice rising wedge out of this setup right now. As you could probably already guess the trade that I'm interested in, I want to see what happens right here. Okay, the way you trade rising wedges is I'm looking for this trade once I get a break. But because there's still a lot of room inside here, because I'm working with a daily chart, this is going to happen first before this can happen second. So what does that mean? We're going to be looking for, if this current candle stays within those parameters, tomorrow I will get a fractal on this one, and that's going to be good enough to trade a break down towards the other side of the line. Okay, so tomorrow morning have a look at your Kiwi Dollar and see if you have a trade set up. As long as the current candle, which is this one here, stays within the boundaries of the candle before it, you will get the fractal and you'll get a setup for an inside candle break down, okay, for the movement to move back across to the other line. This is a really, really good trade. Okay, so we just need to look at this one tomorrow morning 7 a.m. Let me have a quick look on a 4-hour chart. Mihailo, yes, I will email you what you've asked me. Let me have a quick look at a 4-hour chart. By the way, guys, if you have any questions, you can always email me at tradersclub@csctraders.com.au and I will respond. It just makes it easier for me to respond to you from that. On a 4-hour chart, nothing. There was a good triangle trade there that we kind of missed. Missed that one. I didn't see it before. But what you'll notice with the Kiwi dollar lately is that it's a currency that does this quite nicely. It does very, very nice movements, which forms lots of patterns and gives us lots of good trading opportunities. Alright, so I really like this daily pattern. So tomorrow morning 7 a.m. you need to check this chart ASAP to see how this candle finished, and you may get a really good inside candle trading downwards. Okay, so that's what I have on the Kiwi dollar. Alright, let me just recap. Does anybody want me to have a look at anything? I've still got a few spare minutes. If you want me to have a look at something different that I've not covered, just type it in. I'll have a look at it while I recap. Aussie dollar. Aussie dollar is in a similar situation to the Kiwi dollar. We need to wait for this candle to finish, lock in that top line, and then the very next day I will get a trade to go back down into a converging area that we're penciled out. Euro USD, we are right in the middle of it. There is an ABCD right now on which we're a little bit late on, so only for the very aggressive traders, otherwise leave it alone. GBP USD, we're going to wait for that channel, see if we can get to the top channel. Gold, keep a lookout. This is a really nice pattern. When you zoom out you can really see it. It's nice converging flat top triangle. US yen, let's see what happens at this boundary, which is critical. Hopefully we get a good entry to buy. Euro yen, let's look for a pullback into that 61 and to that top line, so we can get a trade out of it. Kiwi dollar, tomorrow morning let's wait and have a look for an inside breaking candle on a downside. Okay, trivial question, if this current candle closes up there, is that a trade that we are allowed to take? I mean, we're allowed to take any trade, but is that a trade which I like trading? Lois says no. Anybody else? Mihailo, yes. Brett, yes. Now remember, it's an upward converging wedge. The answer is no. We don't want to trade an upward converging wedge. We want to trade with wedges. When a rising wedge, this is the best trade for a rising wedge. It's the break on the opposite side, downwards. When the wedges are going downwards, the best break is the upward break. Okay, so I mean, you can still trade it. It generally doesn't have the same strength as this one downwards. All right, so that's why I don't particularly like that one. What I do like is to trade inside. That's okay. All right, so that's the trade that we're looking for tomorrow. If it breaks and closes up high and you want to take it, that's by all means, it's up to yourself. It's not a trade that I would take. That's all. Brett saying there seems to be little USD weakness at the present. Well, this week for the US, actually you mean the opposite, Brett. Everything has gone against. Last week the US was very weak. It had all bad data. This particular week the US has virtually got no data release, so it's going to be a consolidation week. So it's a week that I get the feeling that the US dollar will make a little bit of a comeback against currencies. So that's why this setup to short Kiwi dollar seems fundamentally good, and also it's set up really, really nice on this pattern. Does that make sense, Brett? Anybody else have any questions? Mihailo, ABCD strategy combined with fibs says trade up. Which currency? We're still talking Kiwi Dollar? And what time frame? Kiwi Dollar, I can't see an ABCD. What time frame? Let me see. On a daily? I really can't see that one. Give me one sec. I think that one's already gone by, Mihailo. So I can't see an ABCD out of that at the moment. Oh, if it breaks tomorrow, yes. If it breaks tomorrow, it's a different chart altogether. The trade that I think is most likely that's going to happen is this one, and that's the one that I'm looking for. Okay. All right. That if there's any final questions before we call it a day, it's good to be back. My sleep's all over the place. I've got something really special for you on Thursday. So it's in my head. I just got to get it out onto paper. So try and make it live if you can. If you have any questions throughout the week, email me at the Traders Club, and I'll make sure that I respond to you. Okay. Yes, if you need to call me, by all means give me a bell. I'm happy to speak to you. And look, take care. Check out those charts for tomorrow. I'll see you all on Thursday at 3:30. Have a great week, and I'll see you then. Bye for now.